If you're buying crypto right now, you're about to make a lot of money. Crazy money. More money than you're probably ever going to see in your entire life. But the harsh reality is that you're probably going to end up losing it all, and you're going to walk away with less than what you started. You see, that's the ugly truth about crypto. 98% of people actually land up losing money here. And it's not because they don't buy the right coins. They do. In fact, they even buy them at the right time. And for a while, their portfolios explode. But they make the ultimate mistake. The same mistake that I made in 2017. In 2017, I rode this cycle the whole way up. I turned $100,000 into $10 million. But I was so busy making money and feeling rich that I didn't have an exit plan. I didn't cash out. I want to make sure that you never make the same mistake that I made. And so today, we're going to build the ultimate bull market exit plan. I'm going to show you all the data points that I'm looking at to tell me exactly when the cycle is going to end. I'm going to show you how to exit the market. And then I'm going to show you how to make sure that you don't FOMO back into the market when your tokens keep going up. I'm Crypto Man Run, and I've been here for 3 cycles. The people that I know that made it from this cycle to this cycle and then to this cycle are the ones that had a solid exit plan. And the really wealthy ones are the ones that actually managed to stick to it. Now, I want to see you all in the next cycle. In fact, I want to see you wearing Rolexes and driving Cybertrucks. So if it's the last thing you do in the cycle, subscribe to this channel, hit the notification bell, and make sure you listen attentively, because on this channel, you never know when the alpha is going to drop. I know. You watched my last video, and now you're completely confused. Why? Because in my last video, I literally showed you that all the indicators have literally just flashed that the real alt season is starting. The part where alts are about to rip, and the part where we're all going to make all our money. So if that's the case, then why are we talking about exiting? You see, that's the thing about a bull market. When you get to the top of a bull market, there's no announcement that tells you that it's about to end. It goes up aggressively, especially in the last part. And when it does, you think it's never going to end, because that's what the media tells you. And then it does. And that's when you realize the most important lesson in crypto. You realize that in crypto, it's not about the money that you make or the screenshots that you take. In crypto, it's all about the money that you get to keep at the end of the cycle. After 3 cycles, I can tell you that the most important thing about crypto is to have an exit plan and to stick to the exit plan that you make. So today I want to build that exit plan. I want to build it right now, before it's too late, before the cycle starts moving. All right, so let's get into building that exit plan. The first part of the plan is knowing exactly when to exit. And luckily, that's pretty simple, right? Because all you got to do is you got to understand the crypto market cycle. And that's very simple. Up until now, the market moves in 4-year cycles. And the 4-year cycles coincide with the Bitcoin halving cycle. And so every post-halving year, in the post-election year, we get a very short part of the market where the altcoins outperform Bitcoin. It's literally a 16-week period where the alts go absolutely parabolic. And that's when we make our real returns. And even though we may think that this cycle is different because of the ETFs, because of the institutional data flows, if you look at the charts are lining up perfectly. In fact, it's literally following the 2021 cycle to the month. I mean, look here, a peak, a drop, and then the beginning of the last part of the rally. So even though fundamentally things may feel different, the chart looks exactly the same. Now look, I'm not married to this chart. In fact, I'm not married to any chart, but it's a base, and it's the best base that we have. Because even after all the tariffs, the ETF flows, the treasury companies, it's still playing out exactly the same as the previous cycle. In fact, it's kind of freaky. So step 1 is to use the 4-year cycle as the base. Not the Bible, just a base to work from. And where we get the real edge is when we overlay these signals over the base that we created. And that's exactly what I'm going to show you right now. Now that we understand the 4-year cycle, we need to understand what really drives markets. And let me tell you, it's got nothing to do with fundamentals. In fact, what we often try and do is we try and use fundamentals to explain why the market moves, but it doesn't really work like that. Because market cycles are literally driven by one thing, and that's human emotion, nothing else. Yes, the media news cycle will justify the moves, whether they're positive or negative, but that's not what drives the market. Markets are driven only by human emotion, and they oscillate between extreme greed and extreme fear. When the markets are running, we move to greed, and then we can justify it with the positive news. Why? Because everyone's euphoric, including the media. They ignore the bad news, and what they do is they amplify the good news. It's the same thing when markets are crashing. No amount of good news can move the market. And so what do the emotional media do? Well, they amplify the bad news as if the news is crashing the market. It doesn't work like that though. First, the market moves, and then the news cycle follows to amplify the move. I'm going to say it again. First, the market moves, and then the news cycle follows to amplify the news. And if we know that markets just oscillate between extreme greed and extreme fear, the two human emotions, well, that makes our job really simple. Because all we need to do is to try and identify the periods of extreme fear and extreme greed, and then use that data to make our market move. It's really not rocket science. Buy when everyone's fearful, and sell when you see the signs of extreme greed. It's literally that simple. So our whole job, the whole reason why we're here every single day, is not to find the fundamentals. It's literally just to track the human emotions. And so in this case, all we need to do is to find the best indicators to show us when we're entering extreme greed and exit as soon as they trigger. That's it. And when I say we, I mean me. You have to do nothing. All you need to do is subscribe to this channel, sit on the sofa, and carry on taking notes. That's it. I'm literally going to give you the signals that are going to retire your entire bloodline. All right, let's start off with the first signal. It's probably the simplest signal out there, because we said that all we need to do is identify extreme fear and extreme greed. So let's look at the fear and greed index. I'm going to leave a link to it below. What is this fear and greed index? Well, it literally scores the fear and greed in the market from 0 to 100. When the indicator drops below 20, that's extreme fear. That's when we're buying. When it gets above 80 or 85, that's extreme greed. And so we start selling. Not all at once, because what you'll see in this chart is that we can stay in extreme greed for a while. And actually, the entire last part of the cycle actually happens in extreme greed. That's when the returns are made. I mean, just look at 2021. We literally stayed here for 3 months, and that's when all the returns were made. So what do? Well, we lay the fear and greed indicator over the 4-year cycle. We wait for the extreme greed, and then we slowly start to exit over a 2 to 3 month period. And we accelerate our exit the later in the cycle we get. It's literally that simple. But I'm not going to rely on one indicator, because there are a lot of other indicators that tell us when the market's overheated. You can't rely on one simple indicator. Let me show you some of the other indicators that I actually use. The second indicator, all it looks at is the ranking of the Coinbase app on the App Store. Why? Because as the cycle heats up, more and more retail investors come into crypto, and the first thing they do, well, they need an exchange. And so they download the Coinbase app. When we see a lot of downloads, we know that the euphoria is setting in, and that the retail herd is coming to be our exit liquidity. I mean, you can see it in the previous cycle. Like in 2021, when Bitcoin topped, the Coinbase app was ranked number 1. And what that meant was that retail investors were going crazy. That was the period of peak euphoria. So whenever the Coinbase app hits the number 1 spot, we start planning our exit. But again, we don't just rely on this on its own. We look for the other indicators to show us when the herd is coming. The retail herd is coming, shall we say, to the slaughter, right? All right, another great indicator is the YouTube views. I'm going to leave a link to that one below. When retail starts coming into the market, they need information. Where do they get information from? Well, just like you, they get them on YouTube. So by measuring the YouTube views and looking for the peaks, we can see exactly when the retail herd is coming. And when we compare that to the Coinbase app ranking and the fear and greed, well, these three indicators together give you the perfect indicator to show you when the frenzy or the euphoria is starting. The next indicator I look at is the leverage indicator. Again, it's quite a simple indicator because all it shows is it shows how confident people are in the market. The more confident people are, the more leverage they're willing to take. And when I look at the leverage indicator, I don't look at the normal leverage indicator because that only tells half the story. I look at a completely different leverage indicator, one that most people don't know about yet. But this indicator, called the exact top in 2017 and the exact top in 2021, it's literally the most accurate indicator to predict when the leverage bubble is going to burst. And what it is, it's the leverage open interest of altcoins versus the open interest on Bitcoin. What this chart shows you is that when investors are feeling euphoric, they take more leverage on altcoins than they take on Bitcoins. And that's the ultimate euphoria indicator. And when that leverage bubble bursts, it wrecks the degens that came to make the altcoin gains, specifically the ones that were completely over leveraged. And when they're gone, there's no one left to buy. And that's the end of the cycle. I mean, just look at what happened in 2021. As soon as the altcoin open interest became bigger than the Bitcoin open interest, the cycle ended. And that was the start of a long, drawn-out bear market. And so to me, this is the most accurate indicator to show us when the market cycle ends. But for me, that's not enough because I've got one more secret indicator. It's not a public indicator, but it's another indicator that I use a lot. And I must say, I usually don't share this indicator because when people see this indicator, it becomes a self-fulfilling prophecy. Now look, I'm going to share it with you guys because you're part of the community. And if you're not already part of the community, then just subscribe to the channel now because I guarantee you the single biggest reason why you're going to hold onto your profits this cycle is because you're a part of this channel. Anyway, let's get back to the indicator. It's called the CBBI indicator. And what it is, it's a combination of 9 other indicators. It's available on this website, and I'm going to leave a link to the website below, but guys, please don't share it. This indicator is literally a bull market confidence indicator. And when it breaks the 75 level, that signals the beginning of the last part of the bull market. When it gets to 90 or 100, that's when it flashes red. And that's when we have to exit the market. Now, if you look at it right now, it's hovering around 75. And if this cycle repeats, we don't have a long time between now and the time that it gets to, say, 90 or 100. When it does, that's the end of the cycle, guys. And by that time, you need to be out. So to me, this is another important indicator because it's a combination of 9 other market sentiment indicators. Anyway, now you know that it's sentiment that drives markets. It's not fundamentals. So the next part of the plan is to actually be able to exit when the indicators start flashing. And take it from someone who's been here for 2 old seasons. This is the hardest part of the cycle. Because when markets are flying and you're making money and the new cycle becomes extremely bullish, you're going to convince yourself that this cycle ain't ending anytime soon. You're going to keep telling yourself that this time is different. But take it from me, guys, it never is. And the problem is that that's when you land up holding the bags all the way down. Because let me tell you, there's nothing worse than making money and then giving it all back. So what I did was I created a framework to make sure that I never make this mistake again. And the framework is actually broken up into 2 parts. The first part is to make sure that you completely block out the new cycle. And the second part is to change your mindset. Let me explain to you what I mean. At the end of the cycle, when the market starts moving quickly, people get euphoric. And then what happens is the mainstream media play into that euphoria. What they do is they start pushing positive news only.
We are about to go on a new rocket ship as it relates to Bitcoin.
And they ignore the negative news. The issue is that they've got such huge reach that they're the ones driving the narrative. They make you feel like this time is going to be different. But the media is the enemy here. Why? Because they fuel the narrative, but they're not holding any tokens. And so when the markets flip, they turn negative fast, and that pushes the markets down. That's why when our indicators hit, the main thing is to block out the noise and block out the Twitter feed. You need to focus only on the indicators. Now look, I know it's going to be super tough, but you're going to have to do it. The next part of the framework is a pretty simple one. You've got to change your mindset. There's two mindset changes that you need to make. Let me explain to you what I mean. The first change of mindset is to be okay with leaving some profits on the table. You need to be okay with not buying the bottom and not selling the top. You need to become okay with not capturing all the profits. Because the best thing that you can do in a bull market is sell too early. Rather sell early and don't capture all of the upside. Leave some money in the table, then try and maximize and get all the returns. Because that's going to make you hold the bag for too long. And when you do, you're going to hold it all the way into the bear market. The next big mindset change is to remember one thing. This is your cycle. You're not competing with anyone. It's your cycle, no one else's. It's your money, it's your ambition, it's your risk tolerances, and you don't need to compare it or compete with anyone else. When you start seeing the screenshots on Twitter, you're going to feel like you're getting left behind. You're going to feel like you're not making as much money as everyone else. And so what are you going to do? You're going to start taking more risks to try and make more profits. You're going to see that I made $1,000 in a meme, and you're also going to want to make $1,000 in a meme. Problem is that I have more money than you, and I can take more risk than you. And when you try and beat me, that's when you're going to get wrecked. Guys, it's your cycle. It's not a competition. You're not beating anyone except the market. You got to make your plan, and you got to stick to your plan. And you got to make sure that you block out the noise around you. Okay, so that's when to exit, and more importantly, making sure that you can actually exit. The next thing you need to do is you need to be able to kill your FOMO. That's the last thing I want to address. I want to address the FOMO, and specifically the FOMO that happens after you sell. Because when you sell here and the market carries on running, you're going to think you made a mistake by selling. And so what you're going to end up doing is you're going to end up buying the same token higher, right here. Only this time, you're going to be closer to the top and the market's going to start coming down. And when it does, you're going to hold the token all the way down. FOMO is the one thing that's going to get you completely wrecked in a cycle. And you need to learn to manage it. I manage my FOMO using 4 simple tools. When you sell a token, don't sell all the tokens. Take some profits on the way up. That way, if it carries on going up, you're still in the trade. If it goes down, well, then you've de-risked it a little bit. So what I always do is I always leave some chips on the table, and that helps me manage the FOMO that I get if the price goes up. Also, if you do get FOMO, take some intra-cycle trades. What do I mean here? During the cycle, the market doesn't just go up in a straight line. It goes up, it goes down, and these moves are based on fear and greed, right? So what you can do is you can keep some money on the side, and you can take some intra-cycle trades. When the market is greedy, you sell. When the market's fearful, you buy. And you just keep repeating that all the way up. That way, you'll end up taking good trades, making money, and managing your FOMO. The third thing I do is I ladder my exits over time. I don't exit all at once, and I never ever exit with price targets. Because if I'm wrong about the price, I'll end up hating myself, right? So what I do is I use a time-based exit approach. And I don't even look at price, right? I decide when I think the market's going to top. And just before that, I start selling. I sell every Monday or every 2 weeks. And when I do, I don't even look at the price. And the reason why I do that is because if I look at the price, it's going to make me emotional. It's going to make me stick or try and get a better price. I just sell every Monday or every 2 weeks. And that's really all I do. Lastly, and it's very similar to the first point, which is don't take all the chips off the table. But this time, I want you to start moving into what I call multi-cycle tokens. These are tokens that you're comfortable holding between this cycle and the next cycle. It's tokens like Bitcoin, tokens like ETH, tokens like Solana, maybe some of your favorite DEXs. These are tokens that you know are going to be here in the next cycle, and they'll probably trade higher. All the wealthiest investors that I know in crypto have held their tokens through multiple cycles. They came here in 2017, they bought Bitcoin for $1,000, and they held it through the ups and the downs, all through multiple cycles. No matter how brutal it got, they held their tokens. So what I want you to do is the following. Towards the end of the cycle, when it gets really heated, I want you to start selling all your non-multi-cycle tokens. I want you to take that money and I want to take some profits in dollars and the rest put into tokens that are going to be here for multiple cycles. That way, if you called it wrong and you sold too early, you're still in the trade. You just de-risked, and maybe you won't make as much money as if you were holding risky shitcoins, but you're going to still be in the market, and that's going to help with your FOMO. Okay, so that's the framework. That's the ultimate extra strategy from someone who made it all, lost it all, and then made it all back again and then some. It's about knowing exactly when to exit by combining the 4-year cycle with the 4 magic indicators that I gave you, the ones that show us when the cycle's getting heated and euphoric. It's about ignoring the new cycle at all costs and having a change in mindset that basically says that it's okay to leave money on the table and that this cycle is actually all about you. You're not competing with anyone else. And lastly, it's about managing the FOMO with the 4 easy tricks that I showed you. Always leave some money on the table. If you get FOMO, just take some intra-cycle trades. If you're going to exit with a time-based approach, not a price-based approach. And when you do, exit into multi-cycle token. Guys, I've showed you how to invest your money even if you got $1,000. I've told you that it's pretty much alt season now. And now I'm telling you exactly when to exit. You've got everything you need to make generational wealth this cycle. And I'm going to keep giving you more and more token tips to make sure that we blow up your portfolios. I'll see you again next time. Until then, trade well, my friends.